Welcome back. You're watching Stockwatch with me, Julieta Televi, and join me to take your stock-related questions this evening are Devin Shutte from the Reddy Group and Chris Reddy from All Weather Capital. If you'd like to send questions, please SMS 41392 or email stockwatch@bdtv.co.za. Devin, Chris, good evening to you both. Nice to see you there this evening. Chris, if I may start with you, it was quite a perky Monday for the JSE, doing quite well. In fact, everything looking to have done quite well. The resources stocks up, the rand was stronger, Copper 360 is doing great things, and I can see that there's a question that I know it's a tiny micro cap, but what would you ascribe to the upbeat mood?
Thanks. I think it's a continuation of what we saw actually from Friday afternoon. Post the most recent election poll estimates, we did see some buying across the SA Inc. type of names. So mainly our retailers, the banks, insurers, and even healthcare and telcos. So that continued today. So we still see continued buying in the more SA exposed names. We also saw some buying as well, some strong performances in the resources shares. Part of that is due to what we saw with spot prices. So palladium and platinum were up on the day. So some good results coming, good performance out of Amplats as well as Impala on the day, and then also some gold shares buying as well. I mean, the Amplats is, I think, probably more related to the Anglo's BHP transaction. So probably explaining more of the move in Amplats versus, say, an Impala or Northams.
Yeah, just on that point. Okay, let me get straight into that. Devin, there was a question that's come through this evening asking about Amplats and Kumba down significantly. I don't know what time, because Amplats had a pretty good day, as Chris has just mentioned, but how does the BHP proposal affect the companies within the Anglo stable? If it does go ahead, and the bet seems to be that BHP is going to offer, it's going to dig into its pockets, and I think maybe there's some expectation that 700 Rand for Anglo American might be the price at which they might get a deal over the table. But what happens to Amplats and Kumba? Because obviously BHP wants them unbundled. Does that keep a ceiling on both company share prices?
Sure, Julieta, I don't know. I mean, we cast our minds back to what happened with Thungela, and everyone had completely written off that as an investment case, and I think it wrong-footed many an investor, and went on a terrific rally, huge dividend yield there because there were these dirty coal assets that apparently no one wanted to own. So, yeah, I'm not sure it's going to be so straightforward. It will be interesting to see kind of them out in the cold outside of the Anglo stable. So I think there's probably some caution around what that could mean for them. But I think fundamentally, the businesses are still exactly as they are, and yeah, I think the platinum sector in general has really been through a tough time. So it's nice to see the likes of Amplats and Implats move up today with sadly potential retrenchments and that coming through in the sector in the near future.
Yeah, Chris, I mean, are you sort of cogitating over what a potential outcome might be to all these talks, which could be the start of something, not necessarily the end of it, even though Anglo has rejected the BHP proposal?
So the one way of looking at this, I mean, if you look at the year-to-date performances and even the month-to-date performances, Amplats has significantly underperformed their peers, whether it's Impala or even Northams, looking at what PGM prices have done versus what the share price has done. So if you just look at what's happened since the announcement of the potential transaction, yes, there has been some selling in Amplats and Kumba, as some investors expected this big overhang to come through. I think that's probably a premature trade, because if you just look at the comments from Anglo American post the announcement of the offer from BHP, they specifically said that they do not want to lump Anglo shareholders with Kumba and Amplat shares, because they feel that overhang is a bit too unfair for them. And Anglo American also has quite a large UK shareholder base, and they'll be getting pure SA exposure via Kumba and Amplats. So we do not think that's the current proposal of actually unbundling the Kumba and Amplat stake is will be the final solution. You're probably going to find a bid come through for the entire company, and then over time look at maybe disposing of some of the assets and de-risking the exposure to PGMs and iron ore via a measured route, opposed to actually just unbundling those stakes directly to Anglo American shareholders. So we still think significant upside in Amplats at current levels. The other thing to note as well, Juliette, is that there's still a significant short interest in Amplats. So what's happened is that investors have sold the shares now with the hope of actually trying to buy it back lower once this overhang comes into the market. And the fact that you've got almost 16 days worth of trade that's out in short interest, that means at some point in time, you're going to have covering coming through in the share. So there has to be natural buyers for the share at some stage.
Yeah. Okay, tricky. How much short interest is there in Copper 360? And I ask because the share price has doubled over a week. But I know it's a tiny stock and very illiquid, but there is a question asking how high does Copper 360 go? Devin, I don't know if you've looked at this. It is very small, very marginal, but if you'd bought on Monday last week, you'd have done well.
yeah, that's true. I have no idea. I mean, yeah, really a small stock there. I mean, clearly with the illiquidity that can be moved around quite easily. If memory serves, I think they're also quite tightly held. So there might be a few majority shareholders, but yeah, no fresh insights on that for you.
Okay, Chris, I don't know if this is one that you've looked at all.
Nothing further to add to what Devin said. I don't think there's any short interest actually in Copper 360, given how illiquid the share is and being able to get borrowed to short it. Yep.
Yeah. Okay. All right. So maybe that's just natural buying. So who knows? But bear in mind, I suppose, that the share price of Copper 360 has come off quite sharply from where it listed. So maybe this is just a recovery. Then quite an interesting question, especially in light of, Chris, you were talking about, the Ipsos polls or the polls suggesting a more stable coalition. I don't actually know how anyone can make buying decisions until we've actually had the elections, because really it is anyone's guess how it's all going to come out in the wash. But a viewer says, mine is somewhat of an unorthodox question, but I'd like to know from our well-esteemed panelists their thoughts on whether this new two-pot system implemented by our National Treasury, where people can get some of their retirement funds back, would increase liquidity in the JSE, with some of that money coming into fresh investments. Devin, do you think this is a possibility or a probability?
Gillette, I'm not an expert on this, but my understanding is that Treasury is trying to allow people to take I think it's a third of their pension, and the rest has to be tied up. So I think they're actually trying to do the opposite. I think what's been happening is that people are retiring from pension funds in order to access liquidity for whatever reasons, and actually drawing down on those long-term savings. So I think what will happen is there'll be more tied up. Does that in investments? So does that create more liquidity? Possibly, but yeah, I think it'll be unlikely to see a direct correlation with that. I think any move to allow people to provision and save more for their retirements is a positive one. We know how under-provisioned the average South African is, but yeah, I'm not too sure you can draw a direct relation to JSE liquidity from that.
Chris, any thoughts from you, or is it a bit unknowable at this stage?
No, look, I think it's going to be a function of what portion of those withdrawals gets reinvested into the market. So like what you see with international markets, the retail market does seem to invest a bit more in your small to mid-cap space, the section of the market that's a bit more illiquid to institutional investors or the guys that don't want to invest in that space. Although, I mean, the contra-argument to that is like what we've seen in the past with regards to the various government grants and subsidies that have come through into the markets, a lot of that's actually gone into personal consumption. So whether it's food, apparel, some of the DIY spend in the past during the COVID period as well, it's just gone into consumption opposed to actually being invested back into the market.
Yeah. Okay. Yeah. Well, it'd be interesting to see how this pans out. Talking about exchange rates and taking money offshore. A viewer says, I've had a gut-wrenching day exchanging rands for dollars and euros, but would appreciate a heads up on European stocks that I already hold, ASML and Shell. Devin, not a bad day to be exchanging rands for offshore currencies. Actually, if you did it today, well done, because you managed to catch a bit of a stronger rand today. But on those two shares.
Definitely. Sure. Yeah. So I think that's right. You know, to try pick the perfect time for a currency is near impossible. I mean, there's a reason there's no kind of managed currency funds globally. It's just, you know, inherently volatile and very, very difficult to do. So yeah, well done to the viewer for getting a much better rate than just a week or so ago. Yeah, on ASML and Shell, yeah, I'm quite constructive on both. I think ASML. The latest results, if I remember correctly, weren't that well received, but I think there's such key IP in that business, and you know, in such a sought after part of the market at the moment that I think they still well positioned. I mean, they've got technology that I don't think anyone can replicate. And then on the Shell side, yeah, I think, you know, commodities in general have been very, very undersupplied. And you know, the same to an extent applies with oil. And what we're seeing is that this oil price remains stubbornly high. And so those profits are really kind of falling into the bottom line quite nicely. So, I mean, I think at a high level, both of them for very different reasons look attractive to me at this point in the cycle.
Chris, what are your thoughts on Shell and ASML? Because I mean, Shell, you can see from the chart there, has had a fantastic run. Would you still be buying it?
On Shell, potentially, yes. I mean, you can see that Brent and WTI is still holding up at this close to $90 and just above $80 respectively on those prices. You always run the risk as well of further geopolitical risks to come through into our market, which will then be supportive for something like a Shell or Total to hold. So I think that's support that trade. On ASML, I think if you just look at the most recent semiconductor results that have come through, whether it's ASML or even TSMC as well, I think the concern that the market's got is just what happens with the pipeline going forward. You know, ASML is trading on just under 40 times PE, so you do need growth to come through to support a multiple like that. And I think just post the various buying that we saw over the past, say, 12 months as China was ramping up their demand into the chips bans, whether that demand continues going forward, I think is going to be the key question. And you are seeing competition coming through, maybe not in ASML's case because they've got the specific equipment to build out the chips, but you do need the good growth to come through to justify paying up for these multiples.
Okay. Well, at least you had a bit of a wind at your back with the rand today. And there's a whole bunch of small cap questions, but before I confound you with those, I shall ask of our two big caps. And the one is on British American Tobacco, the other question is on Goldfields. The viewer says, could the panel please firstly offer an opinion on today's announcement regarding the reversal of the menthol ban in America and whether British American Tobacco offers value at these levels? Secondly, could you please comment on the probability of Goldfields announcing further M&A after the Yamana failed bid for Yamana? I'd like to short Goldfields on the assumption that they're looking for deals and be long of Anglo Gold so that I can still sleep at night if the momentum in gold continues. So Chris, I'll start with you. British American Tobacco and this reversal of a menthol ban, do you think it's good news for it?
We think it should be good news for British American Tobacco shareholders. It seems as if they've actually delayed rather than completely put away the potential ban there. But I mean, that being said, if you just look at the share price reaction of British American Tobacco, the share has come off quite a bit from like the 580s that it traded maybe a few months ago. It has always been a good rand hedge for SA investors. You've got a good, strong offshore currency dividend yield as well, which seems to be covered by the existing cash flows. So the dividend is not at risk over there. So I think round about this 540 odd levels is not a bad level to actually hold British American Tobacco. Now, the stronger rand obviously hurts that on the conversion, but you could just see it as being a good entry point into BAT.
Yeah. Devin, your thoughts on British American Tobacco? It had, for so many years, was a stalwart of South African portfolios, the rand hedge qualities, the impeccable dividend. But the fact is that it's a very tricky industry and it's a declining industry. So why actually buy it? Are you not going to be on the back foot all the time?
Potentially, I think you know that's been the argument against it for a long time, and somehow this business has managed to find a way to reinvent itself. I mean, in the last results, those impairments they put through, which included the concern they had about this menthol ban in the US. You know, there was also growth of illicit vapor product usages was really, really significant. But I think it showed, to my mind, that management's got a very keen sense of where the market's going, where the potential pitfalls are, and they've managed to navigate it. So, regardless of if you believe in the products or not, and the health effects and all of those type of things, they've been good to shareholders. And as Chris said, we're starting to see some life in the share. The yield pays you to be invested. So I think my conclusion for all of that is to kind of write it off at your peril.
Okay. And then Goldfields, that is, I suppose it's a pairs trade. So shorting Goldfields on the assumption that they're looking for deals, and I suppose the implicit suggestion is that they're going to mess them up or not get the deals, and that's going to disappoint shareholders, and then be long of Anglo Gold. Chris, is that a trade that you would enter into quite happily?
I'm not too sure about the Goldfields short, but we do see upside in Anglo Gold. I mean, it has been a share that's lagged their peers, more specifically Harmony versus, say, Goldfields and Anglo Gold. So if anything, I mean, I think if you just look at the performance of gold versus the actual gold shares, you probably want to say that Harmony has done too much at these levels. Yes, the update was very strong from them. The yields were very good. But whether it's actually sustainable at these high grades is the key question. They also have some capex as well that they need to fund for the Australian expansion project. So I'd probably be leaning more towards a Anglo Gold long, Harmony short, opposed to Goldfields short if you are looking at the pair.
Okay. And Devin, just your thoughts on Goldfields and maybe just testing that assumption. What does the market want from Goldfields? Does it want it to do deals, or does it not want it to do deals?
Yeah, I think that's exactly right. And I think, the viewers are much braver investor than I am to be shorting any gold stock, just purely because these rallies can be eye-watering. So, on Goldfields specifically, they've explicitly stated they're going to grow by acquisition. We all know how inherently complex and tricky those can be. But I think we are seeing, sustained demand for the yellow metal, and I think supply still remains limited, and these mines take ages to bring online. I mean, I heard a stat that it's something like from discovery to production takes anywhere from 10 to 15 years. So if demand remains around, you're going to see pressure upwards on these prices, and I think Goldfields is one of those that stands to benefit. So yeah, I'm not going to stand in the way of it by shorting it.
Okay. Then a question on the South African REIT market. Are REITs still a good investment in the current economic environment, and if so, which ones would you recommend? Devin, sticking with you.
Sure, it's a sector we've really struggled with recently, Julieta. I think we've been very, very cautious on them. I think we are starting to see signs of life from from the more quality names like the growth points, but I think we just think those distributions still have a long way to go to get back to enticing levels. We're still worried about commercial real estate and the companies that hold those in their portfolios. So in all honesty, we're waiting and seeing. We are missing kind of the beginning of it, but I think we're happy to sit back and really wait for probably a more conducive macro environment, a looser monetary policy environment, and hopefully higher tenant rates, which we're not seeing across the board.
Yeah, in fact, none of those factors are working in their favor. Chris, would you plunge in now? And if so, are there any specific names that you would back?
I think there are some opportunities that are presenting themselves, Julieta. I think, look, obviously when it comes to the REITs, you've also got to be mindful of what bond deals are doing. And I think that's been the one deterrent for REITs when you've got a 10-year, SA 10-year hovering at close to about 12.3%. So that's the opportunity cost of buying bonds with a government guarantee versus going into a REIT where you could potentially get maybe a bit more than the 12%, but you're not sure if the dividend's actually going to be going backwards for the foreseeable future. That being said, though, I think if you're looking at something like Growthpoint or Redefine, which are the more liquid shares in our market, they are giving you quite an attractive yield here. In Growthpoint's case, the Growthpoint Australia update a few days ago was quite positive. The management team does seem a bit more invigorated as well to try and reduce the tail portfolio that they've got in South Africa. So they do have some options around being able to grow the portfolio, dispose of some non-core assets. We do know that the waterfront's also performing quite well in that portfolio, given some of the tourist flows into Cape Town. So Growthpoint does look attractive in and around that 10 rand range, lower 10s.
Okay. And would you go for any sort of specific, like Western Cape REITs, like Spear REIT, for example, where you're having an influx of people from the rest of the country? It almost seems like a no-brainer. But
there's no doubt that there's significant tailwinds that are coming through into the Western Cape portfolio. So we do hold Spear REIT in our funds. We just think that there's a structural tailwind that's coming through across the various sectors, whether it's retail, office, or industrial. You've got limited space in Cape Town as well. And the management team from Spear have shown an ability to actually asset management that portfolio very well. So disposing of certain assets, buying cheaper assets, and then re-tenanting it, and then just extracting value via that process. They just recently announced the most recent transaction as well, where they acquired the portfolio assets from Emira as well, which is quite accretive for the fund. So we think over time, as Spear grows in the market from a market cap perspective, it will start attracting those flows once it gets into, say, the SAPI as well.
Yeah. Okay, I did say that there were a couple of small cap questions. So there's one on the panel's view on Caxton and CTP Publishers with a low PE and a massive discount to NAV. Is it an investment in a great company in a lousy industry or a JSE value trap? And then on Argent, nice yield, low PE, discount to NAV, so similar, I suppose, attributes. With the CEO's negative sentiment on South Africa, is a potential UK listing on the cards as the trend continues to move earnings offshore? So, Devin, I don't know if you look at either of these.
Gilletta, confession, not closely, but I mean, what I do know about the companies, if we look at say Argent, they're operating in the industrial sector. Yes, there's a big UK exposure, but really difficult going for the South African operations. You've got brands like Expander, American Shutters, Jetmaster, and those are often very labor intensive, very energy intensive, rely on our logistics. So a really tough place to be, and I think that that valuation is reflecting it. I will say that over the years it's proved to be a well-run company. It's done really well, and it distributes nicely to shareholders. I mean, I think it's over R1 billion market cap, if memory serves. So not your smallest company around. An opportunity, but I struggle to see how companies like this expand unless, as the viewer is asking, that they go offshore, which very well may mean an offshore primary listing, or we get some economic growth tailwind. So yeah, I'm a bit cautious on that one.
Okay. Having said that, it has done well. Just very quickly, Chris, I don't know if you look at Caxton at all.
I don't, Juliet, so I won't be able to comment on that one.
Okay. Then I'm going to ask you about your stock picks in the last 2 minutes. So, Chris, sticking with you, what takes your fancy?
I'm actually going to stick with my Friday stock pick, and that's going to be Amplats again. I just think the relative underperformance of Amplats versus Impala and Northams is too disconnected from the fundamentals of the company. PGM prices are supportive of Amplats as well, and I do think that whatever deal that gets brought to the table is not going to involve an unbundling of Amplats or Kumba, which then removes that overhang, and you've got that large short interest to actually support buying in the share price.
Okay, all right. Okay, consistency is a fine quality to have, Chris. Devin, how about you?
Yeah, so my pick tonight is a play on the Chinese economy and the real sharp end of it, which is Chinese tech. So it's the Crane Shares CSI China Internet ETF. And really what we've got here is a very unloved asset class. People are calling it uninvestable in some circles. But what you are seeing is signs of life coming through. Regulators are really starting to think carefully about how they regulate certain sectors like gaming. We've seen approvals come through for Tencent last week for a new game. And that's really doing a lot for investor sentiment, which has been massively depressed. So you've actually got an economy that is still growing strongly, although below potential. They're starting to beat GDP estimates, and that could continue. So you've got decade cheap valuations. You've got low correlation to US equities, which I think is attractive. And yeah, I think there's the potential for a massive surprise to the upside with names like Alibaba, Tencent, and JD all in this ETF.
Okay, great. James, we leave it there. Thanks very much for joining us this evening, and thanks for your insights. Much appreciated. Devin Shutte is from the Reddy Group. Chris Reddy is from All Weather Capital. And up next, it's The Close. Stay with us.